We are recording August 8th, 2019. The market is set to open higher. What we don't know is if the market's going to be rejected or if the higher opening is going to result in a continuation or a trend day to the upside. What is important is knowing how to trade a gap. When we trade a gap, particularly an upper gap, the perfect trade occurs when the market attempts to fill that gap on low volume and then reverses and trades to the upside. Mentally, it is very hard for people to trade a gap because the market is higher and they think, oh, look at the risk I have because the market's so much higher. I don't know what to do. I'm not going to trade this. Or the worst thing is they fade a gap. A gap is an indication of change. Trading is about change. We see that the market opens in the upper end of overnight trade and has gapped higher. We are playing the market at regular speed, and the reason we're playing at regular speed is we want you to see exactly what this looks and feels like. The market's going to trade back and forth here for some period of time. What you will see is a break, and you'll see that break will go down to just a couple of ticks below the previous day's high. As we've said, the ideal buy on a move like this is when the market attempts to fill the gap, volume is lower and tempo is slow. The color code that you're looking at, the heaviest volume is red, medium volume is pink, and the lightest volume is white. One of the things that you'll notice is when this market breaks down and almost fills the gap, you will see that the volume is white. Also, what you'll see is that the market came back very quickly. There wasn't a lot of time to act to get into this trade. The question comes up, and my partner asked this question, is this a fast trade or a slow trade? I answered immediately, it was a slow trade, but it's a slow trade you need to act quickly on. As I rethought this, it is either a fast trade or a slow trade. The reason it would be a fast trade is it went down within a couple of ticks of a very recognizable reference. My mindset was for it to be a slow trade to go with the gap. So it was either of those. It is not uncommon when a market gaps higher for it to be followed by a trend day. And that's what's going to happen today. We're playing at regular speed to see the market attempt to fill the gap. It trades sideways for quite a period of time, which can put you to sleep, can cause you to outthink yourself. And it gives you too much, to me, it gives you too much time to think. And it's amazing, the longer you think, the greater the odds that you can get yourself mentally out of sync. So the market's looking above the overnight high. You're getting very little follow through. The market continues to be very slow. So there's indecision here as the market trades back and forth. So we'll just continue to watch this. Notice the range is very narrow. We have a tremendous amount of uncertainty at this point because the market is also, trading almost exactly around the 2,900 level. The 2,900 level, of course, is also a psychological level in the market. So that's that feeling, oh, are we going to go above 2,900 or are we going to fail at 2,900? It would be easy to get trapped because when the market sold off, the first thing that goes through your mind is, did the market fail at the 2,900 level? Had you not seen the white of the representing the low volume and the failure to fill the gap, you could have easily gotten trapped on the short side. Okay, Jen, how many minutes are we into the morning?
Almost 5, but not quite.
Okay, so there's a long time to go in this market. This is only the first 5 minutes. It's going to seem like this portion of the tape drags a bit because we're waiting until the market breaks on the light volume. And it's going to take some time, but we want you to see it exactly in regular speed. So right now the market is testing lower, trading just below the open. Okay, now we're starting to see a sell-off in the market. Market sells off a little bit, comes back to the opening. So again, we got a little range extension to the downside, but no real follow through. We're back to half back and back to the opening. Again, very uncertain. Traders out there are extremely uncertain. The market looked lower, comes back, it's to the overnight high. So you get a feeling. One of the things that happens to traders in the morning, they are overly anxious to find a trade. We talk consistently about letting the trade come to you. If you're out looking for a trade this morning, you're probably going to find one. And if you found one already, it probably is wrong. The market has tested both lower and higher this morning. You could easily get yourself convinced that the market is going to, extend above the 2,900 level, because we've seen it go below 2,900 level. We've seen it come back up to the 2,900 level, but we're not getting any great upside follow through. It would be very easy to have found yourself short and long already this morning, because it's a very uncertain market trading in both directions. It is extremely difficult as a trader to keep yourself in check and not to get whipsawed in a market like this, back and forth above the 2,900 level. Okay, you can see it's failed again at the overnight high. Market's back down to half back down to the open, just above the opening. There is no certainty at all in the market. A lot of chop this morning. Tremendous ability for you to have been long, short, and maybe even short again. This is where traders lose money. I have not seen any certainty yet this morning. Okay, we're less than 10 minutes into the morning. We're back to half back once again. Concentrate on the lack of identification of a trade in here. Ask yourself how anxious you are, or how anxious you were on this day to make a trade, or how anxious you would be just looking at what is in front of you. We've been lower, we've been higher, we've been back above 2,900. We're now at half back. And we're, a third of the market. We're 8 minutes into the morning. And I'm going to guess that there's a lot of you out there that have done a trade or have done more than one trade this morning. Remember, once again, if you're too anxious when you come into the morning, you're sitting there looking for a trade, more than likely you have found that trade. If you have found a trade, more than likely it is wrong. I have not seen a situation where the trade has come to you, and that's really That's really what it's about, being relaxed, letting the trade come to you. If you don't see a trade that comes to you, don't feel the obligation to trade. So we're holding right around the 2,900 level. So the market, just feel the indecision in here. Ask yourself, would you have traded? Ask yourself at this point, if a trade develops, will you be mentally ready to take the trade? Or has this early morning rotation and chop cause you to lose confidence in the market? It would have been very, very easy to do. So we're just about 10 minutes into the morning. No clear identification of any meaningful trade. Remember the gap? The gap would be filled at yesterday's high, which is 28.91.50. On an upward gap, which of course this is. What you are looking for is the best buy if it turns out to be a buy. The best buy is an attempt to fill the gap that fails. And you want to get long as close to the gap as you can. But more importantly, you want to see a failure to fill that gap. You don't always get that, but that's the ideal situation. And as we've identified it in many times in webinars, seminars, ideally you want the market to break, you want the volume to decrease, and you want tempo to go slow. What you're going to see this morning was tempo was not slow. Matter of fact, tempo was everything but slow, which of course is different than how we talk about the perfect trade. What you're going to see, the volume was light, and the market comes close to the gap, doesn't fill it. But as you watch it, when it finally happens, you are rejected very quickly. And that's what you're looking for. When a market gets rejected, you have excess. Excess is single prints. And as you remember, the two most important things that we talk about in trading are balance and excess. Both are in play this morning. When a market opens above the previous day's high, that market is out of balance. The best opportunities happen when a market is out of balance. One opportunity is the market remains out of balance and goes in the direction of the initial out of balance move, or fails to remain out of balance and fills the gap and starts to build value lower. Either of those are usually good trades. A market that's out of balance, remains out of balance, or a market that's out of balance and fails and comes back into balance. When a market comes back into balance, the ideal destination trade is the opposite end of the range where the market last was before it traded out of balance. So when you've got a situation like this going on, you want to be very patient, very respectful of the market, but remember to keep your wits about you. And we're always trying to let the trade come to us. All right, we're now about 12 minutes into the market. So we're a little less than, half of the first half hour. As of this point, we have no direction. We have no defining moment that tells us we have a good trade here. So we'll just continue to watch this market, continue to ask yourself, can you be calm? Can you wait it out? Or are you too anxious and feel that you have to be involved in the market? Most of our errors occur when we are too anxious to be in a market. The other occurs when we are afraid to do the trade when the trade does develop. And I suspect that's going to be the case when a market gaps higher. Experienced traders know to go with the gap. Less experienced traders build up in their mind that the risk is huge because we are so far above where the market traded or even settled on the previous day. And they see that as extensive risk. And that is simply not true. If you want to go to the long side of the market, risk occurs when there are sellers and sellers with volume. It does not occur when the market trades lower and fails to find volume to support that break. Okay, so just think in this time, we're 14 minutes into the first period. I don't know how many times, I didn't count them. The market's been back and forth between the 2,900 level and near the high and the low of the session. So tremendous amount of uncertainty in here. So you see the market still trading around half back. The last little rally came from just above that white spot, which is half back. The market rallies up again to just slightly above the 2,900 level. Right above the 2,900 level, which is also the overnight high. You see a little bit of selling comes in. Markets, they sold it right at 2,900. We're back to half back once again. 15 minutes into the market, first half hour, no decision has been made. No serious trading money has shown its hand yet. Point is, as I said before, stay out of this market till the market shows itself, and don't walk away from a market like this. Don't walk away from a market that's gapped higher, and it's a very quiet market. But it's easy to say, well, there's nothing going on, and walk away, go have breakfast, go take the kids to school. The quieter a market is, particularly when it's gapped higher, the greater the opportunity that something will develop. So one more time, here we are, halfway through the first half hour. We're right at half back. We're right at the opening price. We have no decision. Where you can trap yourself is saying, well, there's nothing going on. I'm not going to trade this day. Sometimes you'll be amazed at particularly trading money, not investment money, but particularly trading money, sitting on the sideline waiting for an opportunity, waiting for the best opportunity they can to get in. Those you see down at the 2887.75 level, very prominent point of control from overnight. We know there's always high odds we can trade back to those levels. We know, yesterday's high. So again, you can overthink it and say, well, we're probably going to go down the overnight high, or we're probably going to go to that very prominent point of control. Remember, what doesn't happen can be equally or more important than what does happen. So if the market doesn't correct or see a counter auction relative to overnight inventory, it's an indication of a market that's strong. If it doesn't make it back to that prominent point of control, that's another indication that the market is strong. And of course, at the same time, you're always thinking about value. The longer the market stays up here, the more difficult it would be to get any type of overlapping value for today. You could get into yesterday's value area, but it would be very unlikely that you'd get lower value or overlapping value. The market spent too much time. In order to get overlapping value from yesterday, you need to get into yesterday's value area, you need to extend lower, and you need to spend time there. The longer we spend up here, the more difficult it is to meet, the criteria to establish just unchanged value from the previous day. Again, we're focused on the gap, focused on the first half hour back to the opening. We have no decision in here whatsoever. We're slightly below the 2,900 level. We are, we are just about 18 minutes into the morning. No decision. How many out there that remember this day are asleep by now? Easy trap to fall into. Extremely easy trap to fall into. One more time, market back to the 2,900 level. I'm guessing out there's been some buys at 2,900. I'm guessing there's been some shorts at 2,900. While the market has sold off from 2,900 a couple times, there's been no real downside follow through. Okay, almost 20 minutes into the session. And I know this may seem like, a slow recording or video, but it's slow for a reason. We wanted you to see this in real time so you know what it looks like. Remember, the criteria is that the gap is not filled. There's an attempt to fill the gap. Volume dries up as the gap is filled, or as the attempt to fill the gap. Historically, we also talked about tempo being slow. I could say tempo has been slow so far this morning, but when the market does break, the tempo is not going to be that slow. It's going to do it very quickly and come back very quickly. And that is going to be the ability to act and act quickly. Okay, there's the break that we've been talking about. So there's the break. Traders excited. We traded below 2,900. Remember the white, unless the market turns red or pink, volume is relatively low. So the market is selling off. It failed at the 2,900 level. The destination trade, of course, is the gap. So remember, we are playing at regular speed. The market is trading, quite a bit. It's broken. It's traded lower. The high this morning's been just a little above the 2,900 level. We're now trading just below the 2,895 level. Continue to watch the volume. The volume remains white. There's another break. There's another break. Now there's the market just short of the gap. Again, notice the light volume. This is a buy for both a fast trader and for a slow trader. I was only thinking about the slow trader, but your buy is down here close to that gap with your stop right underneath the gap. Notice that in just a couple of minutes, the price has been rejected down there. We're back testing that low again, but we're talking very, very short period of time. Notice, look where half back is. In a very short period of time, the market is almost back to half back. We're still in the first period of the day. It's a clear rejection. The market attempted to fill the gap. The volume was not there. You had a perfect buy level with a stop below the gap. You had to act quickly, and it was very difficult to act quickly because it's hard to have your mind adjusted unless you're focused on the gap and focused on the volume. One of the reasons I like Window Trader is the way the market is set up. That the volume, remember, red is the heaviest, pink is next, and white is light volume. So the market broke, volume was light, the market is back above half back, and it's now testing right at the opening. And of course, the market will remain focused on the 2,900 level. Think about how quickly this market has tested the low and how fast the rejection was. Remember, for 20 minutes, the market almost put us to sleep. Now there's only 7 minutes left in the period, and the market has tested the low. It's left excess in two forms. The gap is excess, and the single prints are excess. So we have two forms of excess. Market is testing back to the 2,900 level. And now the odds are that we get a trend day. The next thing we'll be looking for is acceptance above the 2,900 level with range extension to the upside. And we still have 7 minutes left in the first period. But this is a long trade. It's a long and a fast trade as well. Remember, because fast trade because you're just short of the reference. It's a slow trade because the gap has held, value is building higher. So that makes it a slow trade. I was looking for a slow trade. Had my partner not asked about the fast trade, it would have slipped my mind because that's not what I was thinking. But clearly, it is also a fast trade. All right, we've seen that happen. What I'm going to do, Jen, I'm going to ask you to speed this up to about 10 times because I want to go through it pretty quickly now. Tell you, it meets all the criteria for a trend day. You've gapped higher, value is going to be higher, at least the odds are very high. And once that fails, the odds are that you get a trend day. So remember, we're now playing at 10 times speed. Can we show the profile from a couple days ago? I think it's Monday. Oh, I'm sorry, it's up above. The market had gapped lower. I'm sorry. The goal right now is to fill the gap. I believe that's Monday. So if we can put a red line there, that will be the market's first objective, is to fill that gap. Markets go to very recognizable references, and a gap is extremely recognizable.
This was Friday, by the way.
Was that Friday?
Yes.
Okay, so that's and the gap, well, it was Friday. Then the market gapped down on Monday, and we had a huge break on Monday. Wednesday, the market broke very hard, and it was off 500 points or maybe even better early on, and then the market came back and took out the high before the day was over. So it was the biggest recovery in some period of time. Okay, market's trading higher. We have no excess on the high, good excess on the low, and the market continues to trade higher. Now we look for one time framing. Okay, let's kick it up to about 15 times. So remember, we're very high speed now. So, but I want to show you the trend day. And once I show you the trend day, there's one more thing I want to show you. We're showing this before the day is over. But once the market trades higher, fills the gap, there's one more thing I want to show you, because one of the questions people have, well, I missed the gap. Where do I get on board? And it's never a question that I have a very good answer to. What we say, it's a trend day, get on the trend day. The train's at the station, get on the train, go for the ride. So there's no exact place in most cases to get on this trend day. We are going to see one here in a little while. We're at what, 15 times?
Yes.
Okay, let's go to 20.
Okay.
So you can see the gap. You know what markets do. That's a very visible reference. There will be stops more than likely at that gap. So B periods. So we've got one time framing higher, A, B, C. As we said, the market's going for the fill of the gap, very visible. Also, if you'll notice on Friday, if you can bring Friday down, you'll see a prominent point of control that wasn't revisited. So you see the prominent 10 wide. That also is a potential reference once the gap is filled. Okay, so we're 20 times. 20 times. The market's about to fill the gap. Filled the gap, a single tick into that area. Some traders sell the market off. That is a weak high because of its exactness. It's only a single tick above the low from last Friday. So that is considered weak. Very good odds that we come back through it. So you see the market did come back to that level and back through it. It now extends higher again. Remember, it's very important. We said that high was weak. All right, so you see the extension. You see the extension going on with the market continuing to trade higher. Okay, now here's what I want you to watch. Um, Even though we're playing at very high speed, D period attempts to trade lower. As D period attempts to trade lower, it stalls. It is very slow. It's hard to see that slowness when we're playing at 20 times the regular market. But D period got very slow down there and couldn't do a lot of damage. When D period came down there and couldn't do a lot of damage to the downside, that was an inventory adjustment from the early morning longs. That was another opportunity to get long the market. As the market traded off in D period, tempo was very slow and that market just didn't have it. That was a buy. Now you see the markets come back up. All right. This turns out to be a trend day. And like I say, we don't know how the day ends because we're not playing it that long. The two things I wanted you to see this morning, I wanted you to see the gap. I wanted you to see that gap in regular time. And then I wanted to see the trend day because trend days very often follow a gap or a part of a gap. But more importantly, I wanted you to see D period and see the market attempt to trade off, and volume got very slow and the market just didn't have any selling. That was another opportunity to get long the market. All right, the market continues up. I don't know how far it goes because we're playing this before we see the entire day, but thank you. And this was just a great example of watching a gap.